A very, very good morning, everyone. Charles here, FRGNT Daily Chart Analysis, Wednesday, the 15th July, 2026, and the time is just approaching a couple of minutes past 8 local time here in Milan. Unfortunately, I have just done this breakdown, and then I recognized that I was recording the incorrect screen, so we'll have to do this a little bit quicker than I would like to have done, but nevertheless, I will get the concepts out for you. So, yesterday's plays. Bit of a summary for you all. I took 3 positions, which is my maximum allotment for the day, particularly as I had already taken one win in the middle of the 3. So my first position, as I broke down yesterday, was a nice Asia range short based on AUD US dollar, a nice FRGNT concept that I like, based on 15-minute time frame only, 15-minute break of structure. Can we understand that's happened? Yes, we can. A low created breaking structure points to the left-hand side. Can we accredit that to one order block in particular that's available? Yes, we could. It was a 15-minute order block here. And you can see just behind everything, if I go down to the 1 minute, you will see that I had illustrated some structure points that would be the better type of position, i.e., not the aggressive type of trade. And what you can see is how I've entered that position sooner rather than later based on an aggressive break of structure on the 1 minute time frame, had the order block and shorted from it, and then I had to manage my position incredibly aggressive because I hadn't broken any of the structure points that I would foresee price to actually go back down towards and reject towards the upside and create that higher high. And now we see in hindsight that's exactly what's happened. So I'm thankful for using my strategy in that method and staying disciplined, regardless of being in a position that I would have loved to have taken profit. You still must understand what's going on with price action. As price action came up into that higher time frame order block, awaiting, a 15-minute order block, not so much a higher time frame, but awaiting breaks of structure is very important to allow you to trade with absolute confidence. Not so much the of course you gain the confluence, but it's about also trading with confidence if you're not a confident trader. So the fact that I've been trading for, let's round it down, we'll say profitable for 8.5 years, I am able to trade with confidence when I'm taking aggressive positions and even when I'm waiting for those breaks of structures. So my trade volume has the risk of increasing because I understand, well, if I take this aggressive position, I just have to go break even by the point in which I would foresee a reaction from in the opposing direction. And as I was just getting at, we can see as price come into that 15-minute order block, price was incredibly bullish. We can see a higher high, higher low, higher high. So therefore I'm trying to understand, well, where could price go on the lower time frames, particularly if I'm going to enter on a lower time frame, where could price look to react from? That was highlighted on the 5 and on the 1 minute time frame, and I made sure I was break even by those areas. So that was the first position, taking out break even on AU. A nice looking position, a position that I would take over and over and over again. It's just important, if you're not waiting for those significant breaks of structures there and you're taking an aggressive position, I always say first in the position, you must be first to manage. It's just one of my principles. You may not have to agree with it. You may want to leave your stop loss open and potentially stand the drawdown that could occur. But one thing that I would suggest is always understand what's going on with price action, i.e., are you bullish, are you bearish? And understand an aggressive position does not necessarily mean that you're trading alongside price action in any form. What it means is you're trading your points of interest. And it's as simple as that, to be honest. So that was the first position. AUD USD break even out of the market. So again, a nice looking trade. Then I went over to EU. EU was one of those pairs that on Monday we had a good look at it, and we recognized that we were in a range, and we also recognized that we don't mind trading ranges. But on Monday we had a nice basket to select from in terms of trade opportunities. Pretty much everything was green, just waiting for those pullbacks, lower time frame breaks of structures. Then we were looking to take positions alongside that type of criteria. So when you're trading a range, it's pretty much the same in terms of waiting those breaks of structures, but you are trading a range, and a range is very easy to be manipulated towards the downside and towards the upside. It's very easy if you understand the dynamics of the range. I'm sure most of you have traded ranges before with the expectation that just because price is in the range and prices come to the bottom of the range, it's going to head straight back to the top of the range. And when it's at the top of the range, it's just going to head straight back down to the bottom of the range. Yeah, in a sense, that is true. But for me personally, I want to understand that this doesn't happen first of all. The range is being manipulated, or even better still, we'll start that again. You take your position based on what you believe to happen. No break of structure has occurred. The range is then manipulated to the downside. You get stopped out, and then price tanks up towards the upside, breaking structure, pulling back, and then you're wondering, why is it always happening to you? So something that I'm very conscious of when trading a range is awaiting those structure points. Again, just like the position I spoke about on AU, but I must wait those structure points with a high level of degree, i.e. I'm not just going to wait for a 1 minute break of structure when looking to take a long position on a range. I'm very firm that I need to wait for a 15-minute break of structure, and you can see this structure point in the market was placed there. Behind it you can see the word structure point. Therefore, for me to be interested in taking this position, I must see that structure point broken. So we could see that price was stepping up on EU. But stepping up isn't always good enough. You want to see price break structure. Anyhow, structure point was broken. And the same again, can I credit that structure point to a particular 15-minute order block that's available? So down at these lows, there was an order block just here, and it was instantaneously mitigated. So I moved that concept along, and we broke structure, pulled back into the area. That wasn't quite enough for me, because I could understand that although we are using this 15-minute order block just here, this 15-minute order block has been mitigated, but there still was a 5-minute order block below these areas. And that's fine. It wasn't as if I'm ignoring it. It just meant I needed to await a little bit more certainty before taking that position. And as you can see by this lower time frame GAN box, I used initially the 5-minute order block. Let me head over to that here. So refine within the 15, we had this 5-minute order block. Price came in, gave us a little wick to the downside. The importance of that is that price didn't break and close below. I then had this bullish engulfing candle on the 5-minute that looked even better on the 1-minute. And if we head to the 1-minute, you can have a look at that as well. If price is going to load, we hope it does. So we had that 5-minute bullish engulfing candle, which was here, breaking structures, in my opinion, to the left. 1 minute, one line would do it. I.e. as well, if you were to accredit where should I wait for structure to be broken first and foremost, would indeed be here, of which caused that low in the market. Therefore, what's the type of position I'm taking? It's an aggressive position, because I don't have a full degree of break of structure on the 1 minute time frame that I'm using. Therefore, an aggressive concept was used. Therefore, aggressive management was used. So what we can see here is, once price then broke above this area, I was looking for price to pull back down into the 1 minute order block that was left behind, and here is the entry just here. So again, a nice looking type of position, in all honesty, an aggressive position. You can see by my stop loss, I was still covering the 15-minute order block. That was very important. Again, because it was an aggressive position, I understood that price could well indeed pull back slightly lower. If price wanted to pull back to this order block, well, that's not the trade that I'm taking. Therefore, I wasn't willing to do something like that to cover both order blocks. I recognized that I'm going to give myself an opportunity for price to pull further down within that 15-minute order block. If I'm wrong, then I'm just wrong. I was happy to take that risk, particularly because trade one of the day was break even, so I'm pretty much evens for the day, minus a couple of spreads and some charges. So that was trade number one. My management based on the 4-hour 50 EMA. The caveat, of course, we are in a range. We identified the range. The EMA performance isn't really doing too much in terms of helping us decipher where price is looking to go. However, as I'm always double checking myself, and this illustration is on from the last video that I tried to upload for you guys, if I'm wrong and price actually created a low, breaking the 4-hour 50 EMA, and this is a low because we have broken most recent lows to the left, and also to the left, but just not this ultimate low, then potentially we had every opportunity for price to want to pull back up into this 4-hour or 50 EMA, rejected to the downside. When I see price moving up towards that 4-hour 50 EMA, and I'm close to 3.5% in profit, it's really not for me to be risking those profits and just saying, well, Okay, let's forget about the 4 hour 50 EMA just on this trade, and we'll go straight up to the top for a 1 to 10. Of course, I could do that because I understand the dynamics that I'm trading is a range. However, when you're seeing the 3.5% on your account, and that is pretty much your go to in terms of risk to reward ratio, that really wasn't something that I was willing to risk. I'll be honest with you all. I'm taking that 9 times out of 10. I'm not looking always to get or create or bank the home run. This, of course, could have been a nice home run position, but that just wasn't for me yesterday. So a nice 3.4% return on the EU long. And then, of course, CPI stepped in the market. Again, CPI could have gone in either direction. I could have had this candle absolutely wipe my position out if I hadn't closed it anyway, and then I wouldn't be a happy bunny come this morning. So CPI stepped into the market, pushed price perfectly up into those highs of the range, rejected the 4 hour beautifully, but better still, have a look at that 15-minute order block that price pushed into, immediately rejected it, wicked to the high, meaning that the 15-minute order block is still very much so available. At that time, I wasn't really looking to speculate for the rest of the day, I'll be quite honest. However, it just seemed far too easy to let it go. And then with that said, being 3% up, one win up already for the day, it was quite easy to actually continue trading. So that's exactly what I did. 15-minute order block respected, therefore I'm going to respect it as well. I don't foresee that price should then push above that area. And then what we had on the 15-minute time frame, it's very difficult when price moves in that direction to identify a clear pattern in terms of higher highs and higher highs and lows, and then wait for the most recent, let's say, higher low to be broken to the downside before then waiting for price to return up to the order block that created the low, and then take the short position down like that in terms of formation. Because look at the move. I can't just put a structure point in this type of price action. However, what I can do is do that on the lower time frame. So first and foremost, the 5-minute time frame is where I went to firstly, to see if I could understand what was going on the 5-minute time frame. Not too much, but enough. So we can see that price is being squeezed here. Again, price being squeezed is not a concept that I actively use. It's just leaning on all trading knowledge that you have in order to create that bias to take a position that you actually want to take. So first and foremost in trading, it's not just taking positions, it's taking positions that you want to take. You don't have to trade anything. Sometimes I let very good or even great positions go because I just don't feel like trading. Even yesterday, I could have let this good or okay position go and then see it hit a nice 1 to 2.5 and then say, well, I've missed a trade. But not particularly. You just don't have to trade every single day. We're investing. Don't get too caught up in the term of day trading. We're investing for the long term. So therefore, I was happy to invest yesterday with the second trade and that 3% win under the belt. So we continue to do so, leaning on the knowledge of trading. I had the price stepping up, being squeezed. So automatically, I'm looking for price to break out of that, pull back into the order block, and then take a short position down. So that looks as if exactly what I've done, but I've done something a little bit more than that aligns better with my overall strategy. And what I've got and what you can see here is 1-minute breaks of structures all over the chart. So although I've had that evidence, I want still to have my horizontal lines there on the chart as well. And while I am there, what I will definitely say is if you're new to trading and you're still following my concept, then revert to this, your horizontal lines. It doesn't mean you have missed a position. It just means that the trade didn't develop and it wasn't a trade for you in the first place. However, what you can understand is the reason why I have taken that. If we say one line will do it, let's make it nice and accurate. And then you see this happening from the market, that break below, and then you're using an order block that created that break below. Then you may have got in the position just here. And that still would have been a very, very nice position based on the concepts that I teach and based on the concepts that I trade. It's just that your stop loss would have been slightly higher. And for me, EU 10 to 15 pip stop loss is very good. And to be honest, I was tempted to do that too. But I just followed price action all the way back up. As soon as I see that price gave us that nice wick to the high, the second candle printed and I executed, just giving myself a slightly smaller stop loss of around 13 pips, and that's exactly what I did. As simple as that, team. But with that said, of course, we had those 1 minute breaks of structures as well, and what I did, just allowed price to roll all the way back down towards that 4-hour 50 MA, where of course price was now closed, had now closed above that area, and then I was expecting a reaction from it. So pretty much the same degree of management style. So I got out of the market there with around about 2.5%. No, in fact, 2%. That was on 2% on that, or 2.34%, whatever you want to call it. So it was a pretty good day, to be quite honest. Just repeating the concepts over and over and over again, and pretty much until I got bored. So after that position, then I definitely got on with my day on Euro US dollar. And that was it, to be honest, everyone. So 3 trades taken, 1 break even on AU, an aggressive short position in line with Asia range setup. Then we had an aggressive long position just here also on EU, using higher time frame directional bias, as well as understanding the dynamics of the range, managing by the 4-hour 50 MA. Then up at these highs, higher time frame directional bias again with an yes, it is an aggressive position. Just about. I mean, I have journaled it as an aggressive position, but maybe I'll go back through that and give myself more credit and say, well, actually, you did wait for substantial breaks of structures on the timeframes that you could. 5 and the 1, the 15-minute time frame, it would have been impossible to identify where a structural break will take. So I'll amend that, but for the video, we'll call it an aggressive break of structure. But it was a fair break of structure, in my opinion. And that was trade number 3 for a nice 2.5. Well, I keep saying 2.5. It certainly wasn't. 2.35% return on that position there. So that was 3 trades taken, and that's a summary for you all. All the very best, everyone. Do take care of your trading journey, and you'll hear from me shortly.